What is going on, investors? Hopefully, guys are doing well out there. Buckle up your seatbelts and get ready for a gigantic earnings summary of Tesla's most recent earnings. I have just listened to the conference call. I'll talk about the different things that they talked about in terms of their products, their batteries, their Gigafactories, and even the robot that they talked about. They were actually very excited about that. I'll run down all of that. We will take a look at these revenues, the profits, the CapEx, the free cash flow. We'll come over here. We'll look at the vehicle margins. We'll do everything that we normally do with Tesla. And then we'll look at this from a technical perspective as well. Stock is bouncing around. It's at the bottom end of a range. Can you step in here and buy the dip on Tesla? Since it's still well off the highs, the stock was up at $1,200. Now it's south of about $1,000. Can you step in here and buy the dip? I will include timestamps down below if you want to jump around or if you need to take a break. This will probably be a pretty long video. Now, the first thing I wanted to do was jump into these conference call highlights before we get into the financials. So on the conference call, Elon Musk was on there. They talked about Gigafactories. Obviously, as you know, with Tesla, they are coming out with 2 new Gigafactories. They've got one opening soon in Berlin. It looked like sometime this quarter, and also in Texas. The first initial testing vehicles are rolling off the lines there, and they are expected those Gigafactories to get to some level of capacity during the course of this year. Probably not full capacity in 2022, but we're looking at some kind of capacity coming out of those factories this year. Now, the big announcement, which I thought was kind of interesting, is they are obviously looking at other locations for more Gigafactories, and they said, and this was straight from Elon Musk, that they'll likely announce something by the end of the year. So we'll likely have another factory in the works, or at least in the planning stages, by the end of the year. It'll be really interesting to see the geography that they decide to choose on that factory. I'll be interested to see where they decide to put that one. Now, in terms of their battery technology, a lot of discussion around this 4680 battery for a number of different reasons. Number one, from a performance perspective, from a car drivability perspective, a charging perspective, it has a lot of advantages over the current battery cells in the cars right now. But this is not the the Tesla review channel. There's plenty of channels out there on the internet and YouTube that cover that type of thing. From an investor standpoint, these battery cells are actually really important because it looks like they will drive profitability and the ability for Tesla to make better and better cars at a more profitable rate. And so this battery technology is very important, and they are starting to roll those cells. In fact, one of the people on the call talked about driving one of these cars, and in fact, it was a Model Y that came from the Texas plant. Those cells should start rolling off of the Texas factory this quarter and be delivered to customers. So that will be exciting for them. Now, in terms of full self-driving, that will become the biggest profit center of the company. This is according to Elon Musk. He says that will require Robo taxis. Okay. As you know, full self-driving is still in beta. It's a I think it was a $10,000 option. Now it's a $12,000 option when you buy your Tesla. If you want full self-driving, this takes you, from street to street, basically from any place without having to actually steer and drive the car. He says that will become the biggest profit center, but it's not the $12,000 price tag on that will really be that profit center. It actually has to require these robo taxis. And in order to get robo taxis, you need to get past a bunch of regulation and a lot of rigmarole, really a lot of red tape in order to allow robo taxis to actually be on the road. We'll see if they're able to do that. They also noted that full self-driving will happen this year. It will come out of beta and will likely become just a standalone product this year and not be considered a beta. Now, in terms of product roadmap, this is all the different cars and things that Tesla has going on. They noted that if Tesla released new cars last year and even this year, that their output of cars would actually decrease. So they're going to strictly focus on the Model 3 and the Model Y, and to a lesser degree, Model S and Model X. We'll see that when we get to the deliveries and the units that they sold over the last year. So there'll be no new cars. This included the semi-truck. This includes the Roadster. This obviously includes the Cybertruck, and this obviously includes the $25,000 car, which has long been rumored by Tesla. I'll talk more about that in a minute, but no new cars. So you're only going to have Model 3s, Model Ys, Model S's, and Model X's coming from basically the sexy lineup coming from Tesla in this calendar year. Do not expect any new cars. There's lots of engineering and tooling that will be done instead. So in preparation to make the Cybertruck, in preparation to make the semi-trucks and the other products projects that they have going on. They'll be doing lots of engineering, tooling, lots of R&D. That's what they noted on the call. They said hopefully, and that's in quotes, next year, that would be 2023, there will be new cars. Now they said hopefully, okay? So they're not necessarily guaranteeing this. Obviously this has to do with a little bit of the chip shortage and other supply chain logistics that Tesla and all automakers and really everybody is dealing with. And so we'll have to really see that cleared up for it to really clear the way. So I would not, if you're investing in Tesla, hoping for the new vehicles to kind of drive demand and drive interest in the company, I would not expect, you're absolutely not going to get a Cybertruck or any new product this year. And it's possible you don't even get it next year into 2023. They're calling their robot the Optimus, and they're saying that name is sticking. And they said that could be more significant than the cars. That could be a little bit of hype. But what they talked about is if these robots can be developed, eventually you can eliminate labor shortages. Okay, you think about companies like UPS and FedEx. If they can start automating more of their systems, even when you think about maybe like a fast food joint or anything that requires a lot of labor, you think about Amazon's got to be one of the biggest employers in the country. Well, if you could automate a lot of tasks and replace people with robots, well, then obviously that could be a very significant product. And their Optimus robot, which they announced several months ago over at Tesla, they feel that that could be more significant value than the cars. On the same conference call, I will tell you that they said full self-driving, which requires robo-taxis, will be the biggest profit center that the company has ever achieved. We'll see which one ends up doing that, and we'll see if it ends up happening. I tell you what, Tesla stock is wildly undervalued. If this Optimus robot and full self-driving become what Elon Musk thinks it will be, this stock is probably undervalued by a factor of 2 or 3 times, at least on the current market cap of south of $1 trillion. They said the chip shortage still limited their 4680 battery, which we talked about at the beginning of this, and there's still production capacity restraints on that battery. The $25,000 car, quote, not currently working on it. So there's no plans to release the $25,000 car. I would not expect that in 2023 because the way they sounded on the call, you might not even get the Cybertruck or the semi-truck or a Roadster in 2023, let alone a $25,000 car, which they're not even currently working on or even doing any R&D or engineering. The $25,000 car is essentially a pipe dream down the road. It may or may not come. I thought what the other interesting thing that they said on the call, and then we'll jump into the earnings here after this, is there's obviously electric HVAC and heat pumps inside a Tesla, and they feel that these could eliminate natural gas systems that you have in your home. So your gas water heater, your gas heater, you know, those types of things that require that, and nat gas obviously can fluctuate quite a bit in price. Well, they've talked about how they could actually replace that with electric versions of that since they've developed such efficient parts of the cars. But I will quote, they say they have, quote, a lot of fish to fry over at Tesla, obviously making these cars, making new batteries, making new Gigafactories. They're talking about robo-taxis. They're talking about full self-driving software. They're talking about an Optimus robot. They've obviously got a long way to go before they crack that market. But when you start thinking broadly about Tesla, you're going to own this stock 10, 15, 20, maybe 30 years. Well, this is something that could come down the pipeline, and this is certainly a company with the technology in order to do that. Surprisingly, Tesla stock over the last year is up just 4%. You stretch it out to 5 years, and hello, it's up 1,704%. The stock has been over $1 trillion, but now it's sitting just south of that. We do have a PE of 142 that probably is not updated to the most recent financials, which came out after the bell. The Q4 revenue came out. We had $17.7 billion worth of revenue. That's 65% year-over-year growth. Put that in your tech stock pipe and smoke it. That's absolutely phenomenal. Automobile margins. Look at this. These are Apple-like 30.6%. It was basically the same, 30.5 in Q3. So it's showing you, it's up a little bit quarter over quarter, but it's showing you this is where the vehicle margins are. They're at 30%. It's unbelievable. CapEx came at $1.8 billion versus $1.82 billion in Q3. Obviously, they're ramping up those facilities in Texas and Berlin. You'd expect a fair amount of CapEx as those sites are being built and finalized. Finally, you came down to free cash flow of $2.8 billion. You're at 1.3 in Q3. Put that in your pipe and smoke it, Rivian and Lucid. Now, let's get over here to the automobile revenues. This is on a quarterly basis. We had automobiles revenues coming in right at about $16 billion. They have total revenues here. It actually is showing you Tesla has a fair amount of like other revenue as well. So the cars account for about 16 billion, but they do another 1.7 billion in a quarter on other stuff. It's obviously some of the solar stuff kind of mixed in, but you also have like the vehicle accessories and maybe some of the software as well. Interesting that we're seeing that growth as well. You got this 30.6 automotive gross margin, absolutely phenomenal. These vehicle credits, which a lot of investors pointed to, Tesla's only profitable because of these regulatory credits. Well, these are a very small percentage of their profits, because we come down here to income from operations, $2.6 billion. You gotta love that. So you grew your top line on your automobile revenues by 71%. You grew your total revenues, the whole company combined, to 65%. Your operating expenses, I say only, but they only grew 50% when you're growing your revenues by north of 60%. To grow your expenses by just 50%, actually pretty strong. Your income from operation, look at that. Hello, profitability over at Tesla. That grew 354% to this $2.6 billion mark. You notice just over the last couple of quarters, you went from $600 million in profit in Q1, then you went to 1.3, then you went up to 2, and now you're up to 2.6. Hello, 3 billion, 3.5, $4 billion in subsequent quarters if things keep going the way they are. And we have to base that on what they said in the call. They're not going to expand into other cars, which would actually shrink their capacity. They're going to stick with the bread and butter. What worked last year is probably going to work this year. And look, that is going to drive records amounts of profit and profit margins over at Tesla. This is giving you the same stats I gave you, but just on a full year basis. You've got your total revenues coming in the most recent year at about $53.8 billion. That's up 71% year over year. Your operating expenses grew by 53%, but your income from operations grew 227%. Yummy, yummy profits over at Tesla these days. Could the bears ever have dreamed that? Take a look at this. You earned $6.5 billion in income from operations. Now, we have to remind you, the company is worth $900 billion, $6 billion in $6.5 billion in operating profits for a full year. Not that great, okay? But we are seeing how this is moving in the right direction, right? We were actually at negative operating margins back in 2017, negative about 14%. Then they ticked to about negative 1.8%. We were break even essentially in 2019. 2020, we ticked up to 6.3%. Investors thought that was actually pretty good. Take a look at that. We just doubled our operating margins again to 12%, and those automobile gross margins coming in strong at the high 20s. Again, those have taken a leg up, because for many, many years, Tesla was actually in the low 20% margin. So when they sell a car, the margin that Tesla takes home, it was low 20s. And more recently, it's ticked up. And this is with a supply chain issue, inflation, and all those types of things. They've ticked that up to 29%. Obviously, they've ticked up their asking price for a lot of their cars as well. On this slide, they talk about their profitability, some of the reasons behind that. I pretty much have gone over that. Here's in terms of their product mix. And again, I talked to you on the call. They talked about how they are not going to release or do any new cars this year. They will do some engineering, some tooling that will chew up some CapEx, that'll chew up some cost on the R&D side, but we are not going to see new cars added to this list. So you can factor in that we're just going to be focused heavily on kind of the sexy lineup, okay? So we did 305,000 in terms of production. That was in a quarter. In deliveries, you did about 308,000. That was up 71% year over year. I want to look at it from a full year perspective. So we did 930,000 cars produced, 936,000 delivered. I've seen estimates in Tesla, even in these slides, somewhere in these slides, they talked about how they should achieve 50% growth on this. So you're looking in that 1.5 million car range. Obviously, that does factor in the fact that you've got Tesla and Berlin coming online, how well those factories scale up, how quickly they can get them up to speed could impact that to the upside, okay? Because Tesla from 2020 to 2021 really hit the upside guidance. I mean, the most bullish forecast when it came to car deliveries, the most bullish car delivery impact or prediction that I've seen over at Tesla is close to 2 million cars, because they almost doubled from 2020 to 2021. So I've seen some analysts suggest that they can maybe do it again. I think you're coming in 1.6 to 1.8 million cars. I think that would be incredibly bullish and very good for Tesla in that sense. Now, the other thing that I love to see is the supercharger network. This gives Tesla a huge competitive advantage over its other cars. Sure, there's other chargers out there, Blink Charging, ChargePoint, many others out there, but the Tesla supercharge network is already built out very much, especially out here on the West Coast, where you guys might live and might not be as well built out and as dense. But out here in California, Tesla's #1 market, it gives this company a huge competitive advantage. And so we love to see that growth there. Now, in terms of their Gigafactories, we see Berlin still not online, Texas not online, but we should see it come online soon. They also talked about on the conference call the fact that you should continue to see increased production in their existing factories as they continue to improve factories. They talked about how you can constantly improve the output of a factory, and we should continue to see production increases out of the existing factories, and then we'll get new ones online in Texas and Berlin. And then I talked about on the conference call, they said they should announce another location by the end of 2022. Obviously, pending regulatory approval, they'll probably get tax credits to build that factory. Those things take a long time to line up, and then you've actually got to lay the bricks in the ground and start moving dirt. That will take a long time, but you should expect that as well. That will be a pretty big announcement, I think, when it comes to Tesla. Now, they've got some other fancy graphs here. I don't necessarily think these are that important. They do say, and this is not always the case with Tesla in the past, that they have sufficient liquidity, essentially cash in the bank, for their product roadmap, both long-term and for their expansion plans. Here's where they mention that they expect to achieve 50% average annual growth rate in vehicle deliveries. That would put them about at that 1.5 million cars delivered this year. But this is probably conservative guidance, okay, outside of supply chain issues and chip shortages, which certainly could happen this year, but this will likely be a little conservative. That's why I'm like more looking at probably the 1.6 to 1.8 million cars, with 2 millions kind of being the top of the mark with Tesla. Now they throw in some, pictures here. God bless these employees. They do a wonderful job. And certainly if you've owned Tesla shares for any length of time, these employees are really the reason why you've made a lot of money on your shares. And we really owe these men and women a lot of credit. They work super hard and they've been doing a fantastic job. Obviously, when you look at the delivery numbers over at Tesla, they show you some graffiti at Giga Berlin, more quality control, more Giga Berlin body shops. So this is Giga Berlin. Okay. So they're showing you they're making these cars. These are not production vehicles. These are essentially test vehicles, but they are testing and working things out. So things look this looks very, very close to me to reach full type production over in these factories. Here's the outside shot of Giga, Texas. I mean, look how big these are. I mean, to just think about that, and then think about it in the context of the other EV stocks that are out there that have these massive valuations. I know they've basically all been cut in half over the last few weeks, but I mean, look at how big this is. And I mean, this is Tesla. This is like Tesla's second or third factory this size. It's just absolutely phenomenal. They're showing you more pictures here. These are super cool to look at. I don't necessarily think these do anything for you as an investor, but it might motivate you to a certain degree. Now, in terms of cumulative profitability, this is actually a new chart I've never seen from Tesla. The company, for the very first time, when you add up all their net losses and their profits over the history of the company is actually now positive. And look how long it took. Okay, we're talking about over, a decade to achieve this. So when you look at your Lucids, your Rivians, your Neos, and all these other companies out there, look how long it takes to achieve profitability when you're the market leader. They're showing you these graphs. They're going up. We obviously looked at these numbers. We don't need to go over them in graphical form. These give you a little bit more granular data than what we saw in the first slides. We've got this $17 billion worth of revenue. We've got our cost here coming in at 12.8. It gave us that gross profit in the quarter of 4.8. 4.8. Previous quarter, just the previous quarter, you're at 3.6. So you grew your gross profit quarter over quarter by $1.2 billion. Year over year, you more than doubled it, okay? You went from $2 billion all the way up to $4.8 billion on that gross profit side. On that operating side, you're really seeing just this company scale up beautifully, okay? You were at $2 billion in operating profit last year on a quarterly basis. Now you've ticked all the way up to 2.6. Here it is on a yearly basis over at Tesla. Similar story to what we saw in slide number 1. I'm not going to necessarily waste your time. Here we are from a cash flow perspective, and this does have some relevancy when it comes to Tesla because they do have a pretty big line item for stock-based compensation. And when you're building these big, gigantic factories, you have a lot of depreciation and amortization as well. So off this $2.4 billion or $2.34 billion worth of net income in the quarter, well, you get to add that stuff back in. The company has really strong cash flows, okay? At $4.5 billion in a quarter. Last quarter was at 3.1. Last year, you were sitting at about 3. Those cash flows just continue to get better and better and better. And you see here, you saw the pictures of the factories being built. Well, here's the capital expenditures right here, okay? 1.1 billion up to 1.35, up to 1.5, 1.8 in the previous quarter, back down just slightly, basically flat to 1.8 again. So very manageable when you factor in the cash flows, okay? You had positive cash flows in a quarter at 4.5 billion, nearly 4.6 billion to be exact. Now you've got $1.8 billion in capital expenditures. That's really not that bad at all. In fact, that's absolutely phenomenal. This company, like they say, has plenty of cash on hand in order to handle their future growth, no matter what it tends to be. Now, in terms of vehicle gross margins, we'll finish it there, and then we'll get to the technical segment of the show. Well, I tell you what, 29% gross margins on anything. You could be selling lemonade, you could be selling iPhones, or you could be selling cars. 29.2% gross margins. That excludes regulatory credits. That is strictly what Tesla makes when they sell a car. So for every $1,000 price on the car, they are netting out $300. That is absolutely amazing when it comes to really any manufacturing, but especially cars. Now, moving on to the technical segment of the show, the stock's kind of hanging out here. We had this really hard green line. In fact, I'm going to make this even thicker. I think I can make it a little thicker. This green line right here that I'm kind of waving around here, this is a hard level of support. It was the previous levels of highs. When we broke through it back here in October, the stock like shot up like a rocket, okay, all the way up to 1,200. We've come back and touched it once, went all the way back up to 12, came back and touched it again. This, in my opinion, is showing you, if you want to, you can step in and buy the dip here down at these levels. The stock, just understand though, based on the technical pattern we're making, the stock will likely come up here to $1,200 in this range. 1,100 might stop short. It might not get that high, might only go to 1,000, but we'd actually expect it to get up there and then actually come back down because that is what it's done over really the last 4 or 5 months. And so you can buy it down here if you want to. Now, on the bear case scenario, you would not want to break through this $890 price range. We wicked through it the other day when the market had that big gigantic down day just a couple of days ago. We actually wicked through this down to about the 850 level, and that was a bad technical sign, but it recovered very quickly like a lot of stocks. So right now, the stock's in a technical range, I would say between about 890 up to about 1,200. I have no problems at all if you're a long-term holder and you believe in this stock to inch into this stock at these levels. Would I go all in? Let's say I wanted 10 shares of Tesla and that was all the money I had to invest in this company in the next year, maybe even 2 years, or maybe even my whole life. Would I put it all in at this spot? No, because if you do break this $800 level, well, you're coming down, okay? And there's a lot of things that could cause this company to go down. Not a lot of it that could be self-inflicted. There's a lot of macro stuff going on that I don't need to tell you about that could cause this stock to go down. And if it comes down, we're coming down probably well south of $800 on this stock, and that's where I'd really get excited. But in the shorter to intermediate term, if I wanted 10 shares of Tesla, I got no problem starting 20, 30, maybe even as high as 40% of that position in this area. These are ultra strong results, and I actually like, now the kind of fanboys, the car fanboys out there will not be excited the fact that there'll be no new cars in 2022, that hopefully next year there will be. That didn't didn't sound very confident in my opinion. My guess, if I were to be actually bet on this, I would guess that we're not going to see a Cybertruck. We're not going to see anything new out of Tesla for the next 2 years. That means this year, this calendar year in 2022 and next calendar year in 2023. I would guess you're not seeing any new cars, and they're not even working on that $25,000 car. But some of this other stuff is very exciting. The full self-driving is exciting. That is the prelude to robo taxis. That would be an ultra high margin business. I don't need to go into why, but that would be a mega, I mean, we're talking about a mega high margin business if they can get that through the red tape and the regulators, which would be required if you had driverless cars and certainly driverless pickup trucks and driverless transportation of anything on the road. And then you've got kind of the wild card, this Optimus robot. They said that that would be first used in the Tesla factories. That could increase margins over at Tesla if they can replace some employees who we really love and we really support, and we love these employees. They have been a huge part of Tesla really doing well as a stock, but there are probably some tasks that some of these young men and women do that could be replaced and better used as a robot, and we could probably find better use for this gentleman's time. Maybe he could do something that the robot could not do. So that was Tesla's video. We went over the earnings video. We went over the technicals. We went over the financials. I hope you enjoyed today's video. We'll be back again soon with more. Be sure to join us on Friday when we recap all the major FANG stocks on our FANG stock recap show. I'll see you all then. Good luck with your investments.